In 2019, 56% of GPs responding to our survey said they were focusing on carbon footprint at the portfolio level, and rose in 2021 to 73%. The trajectory is clear. GPs recognise that they need to do something about their carbon footprint, but many are just at the beginning of that journey. We first asked GPs for their views on net carbon zero in the 2020 ESG survey, mindful of the wider market move towards a lower carbon economy. And half of responding GPs at that time said that carbon neutrality of portfolios was achievable by 2050. During 2021, the year of COP26, despite climate change and carbon neutrality being at the forefront of the political and economic agenda, net carbon zero commitments remained the least frequently addressed issues by GPs, having been included by less than 1/4 of respondents in their firm's ESG policy. Indeed, 2/5 of GPs view carbon neutrality as unachievable. We see that as a call to action for us as investors. This patchy take-up in many ways justifies our risk-adjusted approach to ESG, focusing on those transactions where we have some ability to exercise more meaningful influence, and engaging with our portfolio GPs where climate has been less of a focus. Advocacy is an important pillar of our ESG programme, and as a secondary investor, we are well placed to utilise our investment platform to reach out across the wider market and exert a degree of influence. We have continued to focus on climate initiatives. In our efforts to help tackle the climate crisis, we are working closely with the PRI-endorsed Initiative Climat International, ICI, the Science Based Targets Initiative, and CDP, the former Carbon Disclosure Project. As signatories to CDP, we have played a role in promoting greater disclosure and awareness of private markets climate reporting. We have supported initiatives related to the adoption of science-based targets and joined a collaborative engagement for private equity carbon disclosure.